Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special Motor Trade Radio podcast interview brought to you in association with eBay Motors Group.
As regular listeners will know, Philip and I have been talking a lot over recent podcasts about trends in the used car market, with the continued strength of values, as well as looking at what might be in store for Q4. So, to provide an update on the latest trends and forecasts, we're really delighted to welcome back our special guest today, Derren Martin, Head of UK Valuations at CAP HPI. Welcome back to the show, Derren.
Thanks, Curtis. Good to be back.
Good. So again, welcome back, Derren. I mean, I think we last caught up back in June. I mean, it seems a long time ago now with everything that's moving on in the world has certainly moved on since then. So it's good to have you back on today, Derren, to hopefully discuss some of the how the values have moved and the market has performed over the recent weeks, and share some of your thoughts on Q4, because as you know, there's a lot of conversations taking place on the fourth quarter as we now sort of just started. So let's start with that, if you don't mind, and take a look at the current values, especially as you've said that the continued growth of values isn't really sustainable in the long term.
Yeah, so I can't believe it was June that I was last on. It does have flown by, but we've seen a really strong market since then. It's been fairly well documented that values, certainly on older cars, went up during June. They've been sort of running along at the top since then, really. July, August, September, values stayed very, very strong. We have a live product, but they lead to a monthly value, and on monthly values this year, there's actually only been 1 month that values have dropped, and that was just before lockdown from March into April. So since then, the market has been remarkably strong, and it's carried on that way into October, really, with a really strong market. It's been made some opportunities, I think, for retailers to make some money, and I've seen some of the results that have been posted, which have been particularly pleasing there for after those sort of 2 dark months of lockdown.
And you talk about Q4, and we say there about that recently there's been sort of the comments that the strength of the market, it's continued to sustain its strength since lockdown, essentially since that sort of 1st of June lockdown, And you've obviously pointed out that the growth isn't sustainable in the long term. Now, the Q4 is the immediate questions, and then obviously it's past Q4 into 2021. And have you got some thoughts on that then?
Yeah, so values at the moment are 7% ahead of where they were a year ago. So 7% up. So a vehicle that's a £20,000 used vehicle. £1,400 more than it was a year ago. That's a lot of money. That's comparing sort of a like for like, so exactly the same model at the same age and mileage a year apart. So there's some real growth there. When you look back at some historical sort of CAP HPI values over the long term, there is always what goes up must come down. Obviously, we've not been in this situation before, though. There's been unbelievable demand for various reasons, pent-up demand, people buying a toy, people downsizing, all things like that have led to a strong market, people avoiding public transport. But we don't feel it's sustainable in the long term, but you have to be very careful about predicting downturns at the moment. It's stayed relatively strong into October, and we think that it will continue to be relatively strong. Q4 is generally the quarter where values do drop away, and I would expect it to be probably similar to that. We might get some normal seasonality with values dropping very slightly, but I don't see that as a realignment based on those increases of 7% that we've seen. And that 7% is obviously averages. You've got city cars that have gone up almost 14%. You've got super minis that have gone up 12%. So there are some large increases that have happened there. We don't think it's sustainable, but we don't think it's going to drop off a cliff in Q4. We think at the moment it's still okay. maybe seen a slight weakness over the last week, but only what you would expect normally at this time of year. So that's kind of our prediction for quarter four, is that you might see some normal seasonal movements only, but not a realignment.
And following on from that, Derren, in terms of values, which vehicle types are performing particularly strongly at the moment? And are you identifying any vehicle types that are underperforming and maybe on the weak side?
That's really interesting to look at the detail behind it, because obviously I mentioned those city cars that have been strong. They have started to weaken off a little bit, but they're the ones that went up by the most. And then you've got older vehicles that, again, they went up by the most, and they've started to soften a little bit as well. So it's the ones that went up by the most that have started to weaken. I certainly wouldn't describe them as weak, though. They've dropped off slightly more than other sectors, but they're still ahead of last year, as I said, and they've only just dropped off slightly.
Yeah.
We've seen some weakness on electric vehicles and hybrids, where they've been slightly weaker than petrol and diesel vehicles. Strength-wise, SUVs have stayed strong. A lot of the market is now SUVs in various guises and various sizes, but they've stayed strong. They actually went up going into October and have stayed level so far this month. I think a really interesting area is sports cars, where people have gone out and bought a toy or are looking for something that they're kind of maybe throwing caution to the wind a little bit after what's happened with the pandemic. They've got a bit of money in their pocket. They've avoided holidays, unfortunately, so they've saved some money. So we've seen sports cars be really strong. Some examples like RS3, Audi TTs, Porsche 911s, they've actually been going up in value. So that wasn't the trend that was happening before lockdown, but it's certainly happened since. So some definite strength there.
There's a few toys parked on people's driveways then, as a consequence of that, then, by the sounds of it.
Yeah, definitely.
The little bits of the soft top convertible sports cars parked as a second car for people at the minute. Then I suspect. I mean, convertibles stayed stronger for longer this year as well. So they usually weaken around May, June time. Values have only just started to soften a little bit for convertibles. So yeah, similar story to the sports cars. Yeah. And you mentioned EV and hybrid there, and and we know that there is an uptake in the new car market in terms of percentage performance and volumes going through the new car market, whether that's driven through or through appetite. And you mentioned there about values performing, but anecdotal evidence is suggesting that used car buyers aren't currently being driven by the economical considerations, so that green agenda that, as you say there, going out buying the sports cars, the convertibles, and that side of things. Do you think that will continue for some time, or do you think that's just an immediate reaction to the lockdown and current market?
I think that with the sort of BEVs and PHEVs and the like, I think it's more supply and demand, really. There's obviously been increases in registrations over the years. There's now more of those in the market than there have been in the past. And I think people aren't prepared to pay the premium for them that they sort of have in the market over petrol and diesel cars at the moment. So that's why the prices have dropped. I think there's still demand out there for them. Well, there's definitely demand still for them. It's just that the supply levels have gone up, and that premium that they hold, people aren't necessarily too worried about environmental considerations. So if they see a petrol vehicle that's equivalent, they're going to buy that one. And even diesel, we've spoken to many dealers that have seen diesel values looking strong as well. So I think going forward, demand for hybrids and electric vehicles will increase, but also supply levels will increase. So maybe there needs to be a little bit of a realignment, which has been happening, to get them closer to their petrol and diesel equivalents.
And following on from that, Derren, with talk of the government possibly considering bringing the ICE ban forward to 2030, what's your view on when values of used diesels, petrols and hybrids will start to be impacted?
It's a very difficult one to call that, because people are still going to want these vehicles, and there's still going to be a lot of them in the used car market. So I don't think that that's anything in the short term that's going to affect any values. Certainly with our forecast products going forward 5 years, we're not going to see anything in that period of time. We've not affected anything. And I think even as you get closer to 2030, there's not going to be a drop-off in demand for used cars. People, and they're not banning used cars, it's the new car targets. So if anything, values could strengthen around that time. Obviously dependent on legislation and cities banning like diesel vehicles or ICE vehicles altogether. But overall, I can't see that that's going to happen, that there's going to be any drop-off in values imminently, really. People hold their cars for longer now. Cars are more reliable. There will be lots of those vehicles still around, and prices will be maintained for them, in our opinion.
And just as a follow-up to that, Derren, how are diesel values actually performing at the moment? Because we can see demand falling away in the new car market. Indeed, I think in September, there were more sales of BEVs and FEVs than there were diesel. So how's that translating into the used car market in terms of diesel values?
I think with new car, it's down to what the manufacturers are producing as well. It's not necessarily down to demand, although there is obviously a movement away from diesel vehicles and questions asked about, if I buy a diesel, am I going to be able to go everywhere? Am I going to be able to sell it for reasonable prices going forward? So that obviously plays on people's minds. But in the used car market, we've seen diesel and petrol vehicles both being strong. It depends where you live. If you live in rural areas, you probably still want a diesel. If you're not too bothered about driving into a big city, which obviously not many people are, you tend to, in the past, have used public transport for that. And at the moment, people aren't really driving into city centres either. They're almost deserted due to what's been happening. So they've stayed strong, diesel values. It has been those hybrids and electric vehicles that have been dropping down. So yes, some strength there. Nothing to worry about really for either petrols or diesel used values at the moment.
And I mean, recently there's been thinking about the fourth quarter now, back on that again. I mean, that's obviously the immediate question on everybody's mind around, what's going to happen in the final quarter of the year. We've come out of September, we've seen the decline in the new car market and the impact of the supply in that sector. There's been talks recently around, defleet, particularly from the daily rental market, about volumes entering the wholesale sector in the fourth quarter, and talk about that. And obviously the daily rental, you're close to it around your previous experience and what you're reasonably passionate about, I think, is Derren, in that rental market. And I think it's very difficult to just sort of reference daily rental because it's a very diverse sector. But what's your view on the volume coming out of the rental market and that defleet market, and what the impact will be in the wholesale sector going into the fourth quarter, and where you see that coming now in the final months of the year?
As far as we're concerned, there's nothing to worry about on the short cycle volumes or rental volumes in particular. What's happened, it's been a really strong market for used cars, and rental companies have been selling during that period. They've been making good money during that period, and some of them have been bringing forward some of their D-fleets because they haven't needed them on their rental fleet, because unfortunately airport business has dropped off. Some leisure has dropped off, although there has been sort of renting cars to go on holiday and that type of thing. If they haven't needed the cars, instead of hanging on to them and defleeting them around now at the end of the summer when they normally do, they've been selling them over the summer months. And as I say, they've been making good money. So we do speak to a lot of rental companies, and I don't think there's absolutely anything to worry about with regards to volumes hitting the market. They'll be fairly normal. Some rental companies do come out of the market in the last quarter anyway, when values can weaken. Caveat to that could be, and I guess this is why there's been some press about it, is that some of the manufacturers could have been defleeting some of their ex-rental cars that they have on buybacks. But the manufacturers and rental companies, to be fair, are very responsible with how they market. And it's only if you get a real big batch of volume coming for particular models and things like that values would be adversely affected. We don't think that's going to happen. We've certainly seen some very responsible remarketing over the last few years, really. And recently, as I say, they've been taking advantage of a strong market and selling them. And why wouldn't they? So we don't really think that there's anything to worry about at all in that area. Obviously, those cars have now gone back into the market because of what's happened over the summer. We think the volumes going forward will be lower for short cycle, based off of lack of registrations as well.
And just added to that, I mean, obviously, the reports from September is that, it was about supply that has hindered some of the good growth that some of the retailers have had, whether that's new or used car. And a lot of them are reporting that they could have had an even better September if the new car supply had come through, that they'd had orders on, or there was more choice of used vehicles in the market for them to acquire. So is it a case that any defleet coming through that actually, there's still they still need to operate, don't they? So those volumes would be absorbed fairly easily across the sector of any kind of increase of volume coming into the sector.
Yeah, they'll be welcomed. Any used cars that come back in will be welcomed. Obviously, rental companies will not have had a big September with regards to registrations, partly because they don't need the cars, and partly because the manufacturers haven't been able to get the supply, so they'll be focusing on selling them more into retail. So it's been a smaller market for rental then. But what I would say is that those cars that are coming back in will be welcomed. They'll be snapped up because the used car market remains strong. There may be some small drops going forward in prices, but nothing seismic. And we do think that any sort of realignment won't be until next year. So at the moment, cars coming back in will get snapped up and will get sold and absorbed into the used car market very well.
And finally, Derren, you've touched on this whole issue of supply and demand in the used car markets and how that's been impacting the sector since lockdown. Looking at Q4 as a whole, how do you see this balance of supply and demand panning out? And we talk a lot about pent-up demand from consumers. Do you see that continuing?
I think obviously the pent-up demand won't continue forever, and we could be seeing sort of the end of that as well. You've got an economic impact going forward as well. You've got the end to furlough, although that is being replaced with a different sort of government program. But there will be some economic uncertainty. I think one interesting dynamic now is from a lot of the retailers that we speak to. They're retailing their part exchanges that come in that they would previously have traded. So I think there will be lower volumes through certainly some of the auction companies going forward, the ones that deal more in that part exchange market rather than have sort of corporate deals with customers. So there will be less volume coming in there, which will keep things relatively strong for the last quarter. So the economic impact will have an effect, but also that does tend to affect younger ages because we think then the hospitality area has been affected more. That sort of people talk about that 18 to 24 age range. They are unfortunately going to be the most affected. They aren't traditional car buyers, although that is on the increase as they avoid public transport. So there will be an economic impact which will maybe put people off buying a big ticket purchase, but we don't think supply levels will be high. September was 4.4% down, which is 15,000 vehicles or something, so 15,000 less part exchanges coming back into the market anyway. So the prices have gone up, as we said, so there will be some sort of small pricing adjustment potentially in the last quarter, but not massive. We've seen a very slight weakening recently. We think quarter four will stay relatively strong, maybe some small seasonal movements. We actually think that next year could be more of a concern, but it's so difficult to predict with what's happened. We've never been in this situation with a pandemic like this before. We do think that values currently are unsustainable, but that could be 6 months away before they start to make a realignment when volume comes back in next year from previous years. So those 3-year-old cars from 2018, the extensions from leasing companies and Motability and the like, that's when there could be an impact. But at the moment, I certainly don't want to be one that's predicting a sort of a slide in values when it's still looking relatively strong at the moment.
And just following up on that point you made about part exchanges, September, the market was down, as you say, 4.4%, but within that, retail was just down 1.1%. So the assumption would be that dealers saw a lot of part exchanges coming in as a result of that. So you would expect them to be trading cars as part exchanges, retailing them, that in normal times, maybe they would have just put out to auction.
Yeah, definitely, especially at that lower price range, sort of £3,000, £4,000, £5,000. They are, if they're a reasonable vehicle, then they are retailing those and making healthy margins on that. So there has been a definite sort of sea change there, and also part exchanges that come in from a different brand. If they're a franchise dealer, they're retailing those now, more confident to do so than maybe in the past that have just, as a policy, have put them through the auctions. So yeah, there is a bit of a shift there. I mean, the auctions have still definitely got their place. They are cars that will still need to go to the auctions, and I would say physical auctions will still have their place because there are still some damaged cars that people will want to see before they buy. So that area is not reducing dramatically, but there will be a bit of a shift towards retailing more part exchanges, as has happened over the last few months.
Yeah.
I mean, it just leads me to say thanks again for coming on, Derren. I think it's more important than ever now that we get you back onto the show and share some of your thoughts and put a little bit of context around some of the figures and the headlines that we're seeing in the media at the minute. I mean, Q4 is, as we said all the way through this podcast, a crucial time for the sector in general. I think one of the points I've picked up out of this and conversations that I've been having is that, you know, if we start to see some kind of easing of values, easing of kind of that pent-up demand and activity, that it's a case of remembering where we were at that point earlier from the lockdown. You know, we've been at a very high level, haven't we, in terms of activity, demand, values, that any sign of easing isn't necessarily a crash or an issue, that it could be just kind of a return to normality of a normal seasonality in the fourth quarter of the year as we approach the end of the year.
Definitely, we need to be careful not to overreact to more strength or overreact to more weakness, because as you say, we could just have some sort of more normal times. It's fact of life that cars depreciate. As cars age in their life cycle as well, they deflate in value. As a new model comes out, it then is worth less in 3 years than it was when it comes out. Those factors will still happen, and it is very important that we don't sort of overreact if the market does start to come down again. It's normal for it to come down in the last quarter if prices do soften a little bit, and we are seeing it at a very, very early potential stage of that in trade values, but it's not being replicated in retail at the moment. So any drops are only very small at the moment. And as I said earlier, SUVs have stayed strong. They're still where they were sort of this stage last month, maybe even slightly higher than they were this stage last month. So I think it's very important, Phil, to put it into context. And yeah, I'm more than happy to sort of keep regular dialogue going, just to keep people appraised of what's happening as we move through the next few weeks.
Yeah, and then get the crystal ball out for 2021.
It's so difficult. Yeah, as I say, we've never been in this situation before, and I certainly don't want to be the one spreading doom and gloom. But when it does start to turn, well, obviously people need to be aware of that. Keep an eye on our live product to make sure you're not sort of making purchase decisions based off last month's data and those sorts of things. Yeah.
And all three of us have been in the industry long enough that we've seen the resilience of the sector through various, challenges that it's faced, and there's out of the challenges comes opportunities, as the old cliche says. So we'll see new emergence of opportunities, but as you say, everything that goes up does come down essentially, and we need to realise that. But like you say, there's plenty more to come. But I think as we've talked around again through this, it's immediate focus is the fourth quarter, isn't it? Because whether you're a senior leader of a retail group or independent dealer, whoever you are within the sector, I think there's certain things that are out of your control, and it's better to focus on the areas that you can influence and you can control at the times like now.
Yeah, definitely.
Well, look, many thanks for coming on today, Derren, and for sharing your thoughts on how used values are performing at the moment, and especially as we go into Q4. So many thanks for coming on to the show, Derren.
No, it's a pleasure. As I say, it's really important to keep an eye on what's happening in the market. And if it does drop away, then no overreaction, and we'll keep people appraised of what's happening.
Yeah, absolutely right. Thanks. So unfortunately, that's all we've time for now. You've been listening to this special Motor Trade Radio podcast interview brought to you in association with eBay Motors Group. Do join Philip and I again for our weekly roundup of the latest industry headlines on Saturday. Until then, thank you for listening and goodbye.